What's up everybody, Mike the CPA here, back with another dividend investing video for you. This time we're going to cover the tax implications on dividends and how you can calculate how much tax you're actually paying on your dividends when you're investing in a taxable account.
Where's all your money gone, Donnie?
Taxes.
Couple things real quick. This video has nothing to do with whether or not dividend investing is a good strategy or a bad strategy. Nothing to do with that whatsoever. Secondly, this video has nothing to do with putting your dividend investments in a Roth IRA. If you have your investments that pay dividends in a Roth IRA, good for you, because you're going to be charged no tax whatsoever.
But as you probably figured out, you can only put a little bit of money every year in your Roth IRA.
So if you want to do more investing, we have to invest in a taxable account. And that is what we're going to discuss today, as we're going to look at the tax implications on dividends in those accounts. You may have heard that dividends can be taxed at a more favorable tax rate under certain circumstances, and that's what I want to talk about today. The different tax rates you might pay on your qualified dividends include 0, 15, or even up to 20% or more that we're going to cover. And we're going to cover this in 3 different examples. Now, the examples are hypothetical, but I've put together real tax calculations for you. So we're going to look at these examples probably in more detail than you ever have before. I want to give you enough detail to be dangerous, but hopefully not enough detail to put you asleep. So let's go ahead and move over there now to the first example, and I hope you take a lot away from this video. All right, guys, let's do this. Now, I apologize if there's any outside noise. There's dogs are barking right now. There's people playing basketball in my cul-de-sac, so hopefully you guys don't hear all that. The first example we're going to look at, we're in this, just pretend this is you, okay, is now, you only need to know a few things here. One, to calculate this, you need to know your different sources of income, your total sources of income, and how much you'll make in dividends. That's pretty much all you need to know. Now, when I talk about dividends and taxes in this video, I'm specifically talking about these qualified dividends right here. Only the portion of your dividends that is qualified get the special magical tax rate treatment, which is lower than all other rates of tax.
Except for tax-exempt income, of course.
And so that's the one you want. So the more qualified dividends you have, the better. If your dividends are not qualified, well, then you're kind of out of luck, because they're going to be taxed just like wages, and you're going to get no additional benefit. The other thing you need to know is that qualified dividends, and if you were to, let's just say not dividends, but if you were to actually sell a long-term investment at a gain, well, that also gets capital gain rate treatment, where it could be the 0%, 15%, or 20% or more. And so that's just what I want to lead off with. And now let's look at this example. So with this example that I've put together first is going to show you when a person can pay 0 in tax. And this is for a person filing single. Now you'll notice that, now I'm filming this in 2020, but so you might be saying, well, Mike, why the heck are you using 2019 forms? Well, a big shocker, 2020 forms are not available yet. So we're going to look at the actual tax calculations as if we're doing this in 2019, because those forms are available. And I will share with you what the qualified dividend limits are, or to get those special rates at some point in the video later on. But
no problem, everybody. I got your back. These are the 2020 capital gain rate income limits shown on screen. Feel free to pause the video to check them out.
The concept is exactly the same. So that's why we're going to look at it with 2019 forms. Okay, so in this example, we have you are making $35,000, okay? That's just from the job. Secondly, you start making $6,000 a year in dividends. Good news for you, $6,000 of your dividends are also qualified, okay? So altogether, what's your total income? It's $41,000. And the next step to calculate this is we have to back out. Let's just pretend in each of these examples, the person's just gonna do take the standard deduction, which is a given amount to you every year, okay? In 2019, that amount was $12,200, and the amount's a little bit more in 2020, but you guys get the concept. The main idea is to show you the concept. So we know in this example, if you made $41,000, we take away or subtract the standard deduction, which lowers your taxable income, you end up having $28,800 left over, okay? So that's your taxable income, is $28,800, the amount of income that you actually have subject to tax. The way you find out how dividend taxes are calculated is actually, there's a thing called the capital gain tax rate worksheet. Now you can actually Google this and find this for yourself. And I'm not going to go line by line by line. That would put you all to sleep, put me to sleep trying to read this to you and trying to make sense of it. But what you need to pay attention to in this first part of this worksheet is if you come down here, this line right here, line 11, it says subtract line 10 from line 9. This amount is taxed at 0%. Okay, 0%. Now this is if you're file single, okay? If you're married, these amounts will basically be double that. But if I zoom in, you can see here where the different income limits are to get your capital gain tax rates at 0%, okay? So as long as this person has an income in total of lower than $39,375 for tax year 2019, then they pay 0 in tax on their dividends. And as you can see here on line 8, it shows $39,375. That is a given number. These numbers right here, they're given to you. They're provided to you. You don't have to calculate those. It's as simple as this, guys. The question is that amount, $28,800, lower than $39,375? Yes, it is. So in that case, all of those dividends, the $6,000 in dividends, is taxed at 0%. It's a little bit more detailed than that, but if you want to pause the video and read this thing line by line, you can see how that's calculated. But that's essentially how simple it is to quickly determine whether or not your dividends are going to be taxed at 0% or not. Is just look at your filing status, find these numbers right here, and if your total taxable income is below that amount, then likely all of your dividends are going to be taxed at 0%. It is as simple as that. Let's move on to example 2, where it gets a little bit more complex. It is example number 2 time, ladies and gentlemen, and you're going to see how your dividends can be taxed at both 0% and at 15%. That's right. I bet you didn't know that they could be taxed at 2 different rates, but they can, and you're going to see that in this example. In example number 2, you're still making $35,000 a year at your job. But this time, your dividend income is looking fly, son. It's looking pretty good. Your dividend income is now $25,000, which means your total income is $60,000. When we take away the standard deduction, remember that number's given to you, that means you're left with a taxable income of $47,800. And now let's go to the capital gain worksheet. And as we're going down the list here, just real quick, and this is just kind of a bonus tip. If you're reporting taxes for dividends, it's really not that complicated, but the first spot you would put your dividends is on Schedule B, okay? They would start here. So let's just say you made all of your dividends from TD Ameritrade for the year. You'd put that amount, $25,000, on Schedule B, and they would then transfer to the first page of the 1040 here if you're using tax software. But that's kind of how the forms connect.
Just to clarify, when Mike lists TD Ameritrade, it's not an individual stock. It's TD Ameritrade, the brokerage account, and that one line item summarizes all the dividends from investments that are held within that account. There is no need to list out each investment that pays the dividend. He's able just to list one line item, and it makes it really easy for tax reporting.
That's just a bonus tip. Okay, so let's go to the capital gain rate worksheet, because that's where we're going to find our answers, right? And we can see here in line 1 is now $47,800, and I'm not going to read this line by line, so to help make this a little easier to digest, now you can pause the video here if you'd like, but I want to move over to the Excel spreadsheet, and so you can see how I broke this out to hopefully make this a little easier for you to study. Okay, so here we go. Once again, filing status is single, and we're going to come down here, and this is where the calculation begins. So this is kind of how I would suggest looking at this for yourself. So we saw our taxable income was $47,800, right? Now in the last example, we saw that to get 0%, we had to have our total taxable income under $39,375, right? That's what we needed. Well, in this case, right away, we're already seeing that our taxable income is over that amount. So once we have determined what our taxable income is after we've backed out the standard deduction, what we then do, we need to back out the dividends from that number, okay? So when we take $47,800, we minus the $25,000 in dividends, that leaves us with taxable income excluding dividends of $22,800. So now what we do is we look at the limit of income for our dividends to be taxed at 0%, and we know that number is given to us, and it's $39,375. The amount of taxable income we have when we backed out our dividends is $22,800. We subtract that amount, $22,800 from $39,375, and that means $16,575 of your $25,000 in dividends in this example still gets taxed at 0%. The other remaining amount of dividends, obviously we had $25,000 total, and these are all qualified dividends, of course, otherwise we wouldn't be having this discussion, is $8,425, right? That's the amount left over. Well, that amount gets taxed at 15% right here. And so the total tax that you would pay in this example, if this is you, on those dividends is $1,264. And your total tax bill altogether would be $3,809. And that's with the taxes on your wages and the 15% on the portions of your dividends that are taxable. And if we come to the actual tax form, you can see that here on page 2. There's our total tax of $3,809 in this example. And so hopefully you can see that your dividends can be partially taxed at one rate and partially taxed at another. All right, let's look at the third and final example in this video. And this time you've made it, ladies and gentlemen. Your income is now in the 1%. That's right. That's going to be you someday, right? You're no longer making that $35,000 a year at McDonald's. No. Now you own McDonald's, okay? And now you're making $400,000 a year, which would put you in the 1% of income earners in the world, or at least in America. But no, not only are you making a lot more in wages, but now your dividend income has gone up as well. And people are starting to look at you and they are jealous of your juicy, lucrative passive income. And of course, with this great passive income, you've made sure that if you're investing in a taxable account, all of your dividends are going to be able to be qualified at some point. So how does this play out for you? Well, right away, we know our total income is $450,000. Your filing status is still single, okay? Still single. We want to use a consistent example here. We're going to back out the what? The standard deduction, and that's going to leave you with a taxable income of still $437,800. Woo! Oh, that's beautiful. Beautiful. So how does this work tax-wise? Well, it gets a bit more complicated. And so let me go to the capital gain worksheet, or the qualified dividends and capital gain worksheet. And initially, in the first two examples, we only had to worry about these limits right here, right? The $39,375. Now, our income is so high, we don't even get to have any of our dividends taxed at that rate. We now have to instantly go down to this amount. Your income can be up to $434,550 if you file single, and you would still have your dividends taxed at 15%. Now, I'm going to just slowly scroll through this real quick. If you want to pause the video and study this line by line, be my guest. But I don't think you need to see this line by line. Let's go over to the Excel worksheet and I'll explain to you basically how this works. Okay, so I've summarized this right here. And let's go down to the dividend calculation part. You'll notice here, first of all, the limit of income for our dividends to be taxed at 0. We're way over that. We're so far over it that none of the dividends are allowed to be taxed because our income at 0, because our income is just far too high. So now we have to go to limit of income for dividends to be taxed at 15%. Okay, so we know our total taxable income. If we back out the dividends, so our total taxable income was $437,800. We back out the $50,000 in dividends. That leaves us with $387,800 in taxable income that is not from dividends, okay? So what we do is we go down to this limit now of $434,550. We're gonna less the taxable income excluding dividends. That means that's $46,750 of our dividends are now taxed at 15%. Okay, so which means the remaining amount of the $50,000 of dividends, the $3,250, it means it's taxed at a rate of 20%. So all in all, our total tax on dividends, this amount is taxed at 15%, this amount's taxed at 20%, gives us a total tax of $7,663 on $50,000 of dividend income. But wait, there's a twist. There's more taxes to be paid, and that is because, yes, a part of your dividends get taxed at 20%, but once your income goes over $250,000 a year, then you also have to tack on the net investment income tax that was put in place during the Obama administration, and that's another 3.8%. And that is calculated on all of the dividends. So to get that, we would take the 50,000 times the 0.38, and that's another $1,900 in taxes that we would have to pay due to net investment income taxes. So $7,663 is from capital gain rates, and then the other $1,900 is from net investment income taxes, in which you can see that if we look at our actual tax forms, the example, there it is right here. It shows up on Schedule 2 on line 8 is that $1,900, and the actual form, if you guys want to see what this form looks like, if you start making lots of money, this will be you if you have investments, I guarantee it. Here it is. So it's the form 8960, and you can see here that the $50,000 is subject to this net investment income tax. That's why there's additional taxes to be paid. Of course, how does this turn out if you make $450,000 in total with dividends? What's your total tax? You're going to be sick when you see it, but the total tax, if this was your income, would be $120,487. Just FYI. So if anybody tells you that the poor is paying all the tax, well, you better think again. It's the people who make a lot of money pay the bulk of the tax in America. But that is this lesson today. I hope you got a lot out of this. I have a lot of other videos around investing in taxes, so be sure to check them out. I will link them down below in the description section of this video and comment section. And if you like this video, please do me a favor, guys, and support the channel by dropping a like, leaving a comment below. Make sure you're subscribed, and if you're subscribed, make sure to hit that little bell notification icon, because I'm going to have more content coming out like this in the future around investing, taxes, finances, and all that good stuff. And that's my focus here on Money and Life TV, is to help you become fiscally fit. Well, thank you so much. You've been a wonderful audience. I always enjoy making these videos for you guys. Live life uncaged. Have a great week, and I'll see you in the next episode. Love y'all. Peace.